going on, guys? Welcome in. In this video of the series, we're going to be going over the -4 of the 30-second range CB model that I have come to use almost every single day and has about a 95% win rate. I know that sounds absolutely crazy when it comes to trading, but once you see what I'm about to show you, then you will completely agree with me. And you guys should see because I post it. We get this set up on average two to three times a week, and it's pretty good for 30 to 100 points depending on what kind of pullback we get before we deliver up to that -4. So it's real simple. I know a lot of people have always asked me a bunch of questions about it, so I figured I already have one video on it, but now I've actually like defined a model around it. Instead of just okay, it's a level. Like I put extensive. My brother and I have put extensive back testing into this, about 2 years worth, and we still watch it play out every single day. My brother actually only trades. My brother does not trade New York. He only trades London. So, but I'm kind of lying there. The only thing he will trade in New York is the -4 CB model. CB standing for cock block because we basically look for price to get close to it, tease it, and then retrace, and then it will go back to it. And we're looking to get in on that retrace. If you guys have seen my X post on that, so I'm going to show you guys a few examples, go over it, show you the fib settings. Should be a fairly quick video. We'll try to keep it under 10 minutes here. So obviously, today's was a good example. Um, so all you do is, like I said, I'll give you the fib settings at the end of the video. You just want to fib out the first 30-second candle of the 9:30 New York open. So the 9:30 0 0 second candle to the 9:30 30-second candle. Um, this is the first 30-second candle after open. And you want to plot where your you want to plot. It's not exactly a -4. I don't know why. Credit to Markos Mom. I'm not sure if he got it from somebody else, but I learned this from him and then just kind of developed a model around it. But it's essentially I learned it from him. I will post the tweet where I got it from him in the link description below with a few more details about it, because there are more ways you can use it. Essentially, he uses it in a way where if you're getting to the chart late and you didn't have time to plot your levels, maybe you shouldn't be trading anyway, and you should take your time. But that aside, it gives you it gives you quick reference levels that you can plot quick that we can potentially see price deliver to. So all we do is we plot it out. It's the -4.045. Again, I don't know why. That's just the settings that were shown to me. So all we're looking for is as soon as I see -4 plotted, the first thing I do is I I plot the -4. There's also another indicator. It's known as key prices and levels by out of options, and he has it. It's at the very bottom of that indicator. If you go to the very bottom, you can see down here where it will automatically plot those. It will automatically plot those levels for you. You can also it also combines -6 and -8. And I'm not going to go over too much of that today, because you can learn what all those levels really mean in the X post that I'll post in the description below. So plot your 30-second candle or use the indicator, which I do, but for this case, I'll use the fib. And what I'm doing is we found out in back testing that once we get to within 15 points of it, so in this case, today's -4 was 928.75. So I will plot a level at 913.75, which is the 15-point mark, and I will wait for price. Now, sometimes you won't always get a retrace. Sometimes we will just blast right through -4, and then at that point there's just no trade. If we go back to the other -4, I haven't done any back testing that shows like we could get it again on the other -4 just the first time, just the first -4 that it hits during the day. So what I'm looking for is you will see this a lot. You will see price hit that trigger And then when for whatever reason we will not hit -4, we'll get some kind of retrace, and then you can look for some kind of, in this case, bullish setup, whatever you like to use in terms of entry models to then get long. What I've noticed is the average retrace is usually like 20 points, but sometimes it just depends on the market structure at that point. Obviously, at this point, we want to come back all the way back to these order blocks. We had about 100-point retrace today. That's why I recommend not just getting in at 20 points. I recommend waiting for a setup or aligning it with some kind of PD array to then get back to that -4 to so that way it keeps your stop much smaller. So you're looking for the trigger. I call this the trigger, the 15-point trigger. And once we hit that, this is essentially saying it's triggering that we will come back for -4. Only two times in 2025 did we trigger -4 and not get it the rest of the day. And a good note of that is that that happened both times in the PM session. So perhaps maybe only trade this until noon, and if it doesn't happen, then it just doesn't happen. So take that for note. But in the morning sessions, it has hit 100% of the time. As long as we trigger before noon, uh, it hit 100% of the time. I do have the Excel sheet as well with the data somewhere. I will also try to post that in the description below. So yeah, I mean that's basically it, guys. You're looking for price to get to here and then to here. Now I can also use it in terms of like some kind of bias as well, right? Because sometimes this -4 will line up with a key level, such as a previous day high or a previous day low or some kind of important level. So if I turn the indicator on, it's going to get kind of messy here, but you'll see -4. We'll turn some of this stuff off here. But you'll see the -4, -6, all sits right there. Here, we'll turn this off. We'll use this. And what I like to do is draw a line across and see what does -4 line up with anything significant. So like I see it sitting near this high here. Like it's not always big. It's this high and these highs. Like or sometimes it'll line up with London low, and I'm like, okay, that makes a good. That has a good draw. Now, if my hourly bias tells me that okay, we can look for like if my hourly bias is staying down and I see -4 kind of staying close to London lows, that gives me a good hint. It just gives me that extra confluence that London lows should be the draw here because -4 is lining up there because it's very rare that we have a day where we do not hit -4. Obviously, it depends. Like uh, on some days, like on Monday, we had in 82-point opening range, meaning we would have like a 320 points away from -4 to either side. And then actually yesterday we did not hit -4. That would have been 5 Feb that we did not hit -4 because we had an 82-point candle. So expecting expansion 320 points away from that candle, maybe a little unrealistic. So that's how we use the -4. That's it in a nutshell. Very very simple. You're looking for a trigger. You're looking for a retrace that has not hit -4 yet, and then you're using it. Treat it as like we just missed a daily high or we left equal highs up here and we retrace all the way back down. Treat it as something that like price will be back for. It's that simple, guys. I will post the here's the fib levels. If you want to pause the video, I will these are the fib settings that I use. And I guess I will go over real quick. So basically, you want to look at -6 wasn't talked about very much, but we do see a lot of reactions there at times. But the big one is a -8. Basically, if we get to -8 and close over it and start like pushing through it, you essentially do not want to fade the trend until we get up to a -16. And again, if you use these levels and align it with your key levels, such as your previous day highs, weekly highs, monthly highs, whatever, and it can give you kind of a good idea where you think price should draw to. So I'm gonna show you switching over to some examples. Here we have -30 second opening range, which in this example we triggered down here, I did not re-enter. I was already short for some reason up here. This trade was about almost a year ago now, so it shows how long it's been working. We got about 8 points from -4 here, and then you see it actually lined up with a gap fill down here. So that gave a good confluence to try and get short up inside of here to then target that -4. But you see 8 points from retrace back down. She goes. And then if we go to the next one, the same thing. This one actually delivered both sides, but like I said, I haven't back tested enough to know whether backside. This doesn't happen very often. -4 to -2, the other -4 is pretty rare. So I'll take it with a grain of salt or trade it. I mean, back test it yourself. But you see, -4 retrace, up we go. Comes down to a couple fair value gaps there. Back up it goes. Complete reversal. And then same thing down here. Gets within 15 points. Retrace. Back down she goes. I don't know what it is. Again, Markos Mom. Great stuff. Great stuff. Here we go again. This one actually started putting the trigger here. You see, we got 15 points with from, waited 20 points for a retrace inside of a fair value gap, and back down we go to deliver. These candles were big, so it looks very, very small, but that was actually quite a big retrace there. If you look, it was 590 from 530, so about a 60-point retrace before actually delivering back down. Um, and here we have it again. You see how we barely missed that -4 retrace. Back down we go, complete reversal. Just amazing, guys. I truly still don't understand it. But yeah, it's an older one. This is from let's see, it looks like the December contracts of 25. So again, you do not, again, great note here. If we retrace for -4, you do not want to fade it because we will be back. We will be back. 15 points from retrace, back down she goes. Reversal. You're not always gonna get a reversal there, right? You're not always gonna get a reversal. This is from May of last year. May of last year. Gets close, retrace, comes back down. Again, I don't know what it is. Um, this is a trade we took this week, I think, actually. BC 15-point trigger, tags it right here, comes up. We get a 30-second fair value gap with like a 30-second mitigation block, and we take that on a funded account all the way back down to -4. We get with a -4 here, and then you have another 30-second. Yeah, you have a 30-second -4 here, retrace, and she comes back down. So pretty good stuff, guys. Pretty good stuff. I'd love to see it. Love to see it. So if you guys enjoyed this, let me know in the comments below. Ask questions if you want. If not, we will see you guys in the next video of the series.